Now we have Pat Casey, who is kind enough. He's waiting for a flight that's going to leave shortly. But Pat Casey is a senior VP with Guaranteed Rate. He handles the Mid-Atlantic area. I've known Pat for many years. He's a terrific manager, well thought of by his peers and certainly his employees. He is a dynamite salesperson who is state of the art when it comes to mortgage origination. So we're very lucky to have him today, and he certainly is going to share his experience of what he sees. Again, Pat is from Duke, and I'm a University of Maryland Terp, and I still talk to Pat, and I've talked to him for many years. So I'm glad to have you with us today, Pat.
My deepest apologies. I did make it to my first Final Four with Duke one this year in Indianapolis, so I didn't want to rub it in. We missed you in the ACC this year, Pat.
Yeah,
I just want to follow up on that. Yeah, I was going to tap into that last question, on the self-reliance versus working in groups and crave cooperation. Just, again, I'm no expert on this, but thinking out loud, we've got this at Guaranteed Rate. As you're bringing up that next generation, our pod model, the way we do our workflow, there are lanes within that of segments of the assembly line, if you will, of manufacturing the mortgage, where they are able to get that foundational knowledge of the business from that operations side on handling the clients in front end on a decentralized basis, but leveraging technology, all the workflows supported by the technology, and then that is how they kind of gain their business, but they're able to work in teams and collaborate and interact, so you kind of get the job done, because I think it's kind of tough to break into the business today with everything you need to know about the mortgage business when you're taking it cradle to grave in the traditional processing workflow. I think that's a real struggle for the millennial generation. So you can kind of actually leverage one of their traits for bringing in the next generation, because you need them to really segment it and learn segments of it, and start to learn other segments of the business in a cooperative work environment, particularly supported by technology. That's the key thing. So there's bright lines, their dash lanes, and what they're doing. So we have that at Guaranteed Rate, and I think that's a powerful tool. Any company, and a lot of companies are working on that. That's a great way to, I think, build that next generation and leverage their strengths.
So Pat, when you're out there, and I know you're recruiting actively, and certainly, you've been doing this for a long time. Have you seen, when you go to recruit a Gen Y person versus, let's say, your veteran baby boomer, do you have to go through a different approach, or how do you change it? Because obviously, as already shown in the data today, Gen Y is different.
Yeah, I think you do. I know I haven't figured it out yet. I'm still every day chipping away at it. You love to be able to cut somebody's chest open and see what's inside. I think if I got your question right, different between recruiting a baby boomer,
right,
versus for the Gen Y. First of all, you got to find the Gen Y people that are out there in the business. If you're talking about existing people, I think in my previous life we had less than 500 people. We had 6 originators under 30 years old. So the ones that are out there are candidates. You really want to make sure you get your hands on them. I think that I'm a baby boomer myself, so I tend to go for the face-to-face meeting when I'm calling somebody. Hey, can I meet you for breakfast, coffee, lunch, after work? The worst we end up as friendly competitors. That face-to-face interaction, which I think is invaluable either way. But I have leveraged all the social media to be out there. I have a personal website. I think to attract really the survivors in this industry are the I think the early adapters to technology and new change in process. The people that are at the top of their game, that are 50 years old, and somebody that's 32. They both have a similar trait in that they're early adapters and they embrace change. And one of those is technology. So I'm making sure that I've got a personal website. I think there's very few regional managers in my previous life and Guaranteed Rate that have an active website as an originator, kind of actually out there trolling for clients and customers. So I'm living what they do every day, and then be on all the social media, LinkedIn, Facebook business page, and be an adapter of it. I've got a mortgage app that's out there that is very easy and obtainable. it's amazing how when I pull that out at a recruiting meeting face to face, or I send it to somebody on a text by link, how wowed they are by that. Even somebody who, again, the stereotype of this technologically savvy generation, it's you don't know what you don't know out there. So I try to do that, and really I think the best way to relate to them is to tap into their love of technology, to show that you're comfortable with it and you're using it, and be actively learning it all the time, because they know that that's going to be a struggle at a company, that if there's barriers to that, it's going to be barriers to how they relate to their client base.
So Pat, and I consider Pat one of the best salespersons around. I mean, again, it's been highly successful everywhere he's been. Pat, so when you look at prospecting and you look at selling styles, and you look at the new generation, how do you see that kind of playing out? Because in many ways, the system is set up in mortgage banking that go sit at a desk and make some cold calls, and that's what we're going to have you do. Do you see all that changing, or how do you see that's going to be impacted?
I think as things change, still things remain the same. You talked
Right.
about this generation, millennials, being more social. I think there's a segment of people, certainly out there, a good segment of successful mortgage bankers that want to build relationships face to face, and you've got to provide as a company an events platform for them to do that, where it's an ease to do that. We have an events group that supports events along with the social media. But the events, so they want to set something up and they want to do a home buyer seminar on how to buy right, or even just a social event for realtors. We're doing one right at 2 o'clock today. We're doing a TRID webinar through our partner exchange to educate realtors and really, quite frank, anybody in the industry on what the changes are that's coming. And you talked about 2,500 days. That's 60 plus days.
Yes.
And you've got TRID in effect. You might have some. I know Shelby introduced a bill that trying to do some changes and delays, but I think it's pretty much a fait accompli. It's coming down the pike, so we've got to get people educated on that. And you do that through a combination of a webinar, which is very efficient. So you're giving the seminar, but you're not making everybody come to a room. You could still do that same webinar, but host it in a conference room and bring in lunch and get the interaction, but do it using the technology. So based on whatever fits your personal style. But I've seen multiple success with people doing it just over the web, and somebody can sit right at their desk, take an hour, grab a sandwich in their deli, and get educated on it. And so I think you got to have multiple ways, again, supported by technology, because that also, from a cost structure, we all know the cost to manufacture a mortgage with compliance things has gotten more and more expensive. You've got to cut out a lot of the layers of cost, leveraging technology and imaging and everything else. The digital mortgage is very, very near and dear to come to fruition here.
So I guess from your viewpoint, and I'm interested in your comment, is that when you look at the real estate agents, they're worse than the mortgage industry. The average age is somewhere around 56 to 57. And they also have the same issue that you're not seeing younger agents come into the business. And so now, certainly when you look at the data is showing that their interaction with, the real estate agent is going to be a much older person than the Gen Y generation. What I see just from my clients is that the real estate agents that are progressive want that interaction with a younger person, because they do want the first-time buyer customer. And how do they get that? They themselves have to reach out on the social devices and so forth. Is that your experience?
Yeah, it's funny, and there is a population, not huge. You're right; it's the dominant population of baby boomers, things like that. But there is a population of up-and-coming younger realtors in the business. Again, same as Lawrence. There's a fewer number. They are even asking the question of, how do I reach the other millennials, the Gen X and Gen Y, how do I get to them? Again, I think for the baby boomer realtor and the Gen X, you've got to bring the technology strength to your partners as a mortgage company to the referral base. And again, not being shameless self-promotion, but the partner exchange we have for realtors is phenomenal. And in that is coaching series and things like that really is not high tech for somebody. I mean, they can log in and it's a simple, it's not a complicated technology for somebody. You're logging into a website. So and that brings that to the partners. You've got to bring that technology as a company, whatever you've got, whatever technology you got, even if it's not the best thing in the world, you got to bring it to those referral partners. And, we promote the online app learning so that they can connect, those borrowers from those customers, because they're going to get them by marketing to be quite frank, their client base, the baby boomer realtor, their client base, and saying, hey, who do you know that has a kid that's looking to buy,
Right.
and they're still, in this generation, kind of one of the four kind of thoughts I wanted to leave is, one of them is they still want advisors, and I'm a baby boomer father. We've got, my wife Deanna and I are both former realtors, believe it or not. We have 3 kids, all Gen Y, 25 to 32, so they've been part of that, the helicopter parents, that hover over. They all played college sports, 2 lacrosse goalies and a tennis player, and we were there at all those events, so that you didn't get that complete separation where they disappeared for a semester and came back for a holiday. I couldn't even afford to come home for the holidays, my day. So they're open to that support and advice, and they've been successful, and they've built that team, and they but you got to be credible about it, and you got to know your stuff. You got to bring it. You can't show them a house as a realtor or be a loan officer and not be able to do the good faith estimate, things like that. So you got to know what you're talking about, because they're going to expect that, and they can get a lot of information in advance before they deal with you. As we well know, they can get a lot of information about a property from a realtor before they see it from a virtual.
They're really great points, and I'm curious on your thought. Certainly, what I see with some companies is that they're, especially on the social media end of it, they're not wanting their loan officers in particular to, share information. It really strikes me, and the data certainly supports that that's a pretty narrow perspective, considering that that's what the customer base is doing. So what are your thoughts on that when companies do not allow the originator that, again, the social media strategy?
Yeah, I've seen that gamut after a long time at a bank-owned company, for a long time, where they worry about the brand and protecting it, and didn't really have access to other, maybe LinkedIn, to being an independent for over a year that fully embraces social media. You still got to manage compliance risk and things like that, but I think you have only one way to go, is to be fully open and embrace it and access to it. I mean, if you look at companies, if you want to find out what they think of you and your brand, if you want to know where you stand, all you got to do is check YouTube, Yelp, Facebook, whatever.
Right.
If you're not out there, Twitter, LinkedIn, for product review, posts, things like that. And if no one's talking about your company online, then chances are the good consumers don't know you even exist. Right. So you got to play. You got to play, and you got to play hard and well. That's not the be-all, end-all of how they do business, but it is their network, and it is their center of influence, and it is how you get exponential referrals. If you do a good job, particularly in the service levels, we're very concerned at Guarantee Rate about our Net Promoter Score, one of the best in the industry, if not the best. About the client base, because we want them to come back, and we know that's everybody knows that's not new information. They give good service, they're going to talk about it, but even exponentially, because they're going to post it in the social media, especially the bad stuff. Maybe it's even untrue. So you got to be out there playing, and your guys. In fact, the other thing is, if you have a barrier to entry to access to social media at work, and there are concerns about productivity and all that kind of thing, there's literally a whole group of millennials that will not come to work for you. And in fact, it'll be unspoken. You won't even know why you didn't get them or why you didn't recruit them and get them on board. And it's because of that they can't function in the workplace like they want to function.
Yeah,
they end up going to work for a different industry, to be honest with you.
Yeah, that's a great point. I mean, I know my clients that have done rookie programs will talk about that, what they have to do to get the Gen Ys to be engaged in this industry because of this. And a lot of times what I see when companies, especially on the bank side, I think companies, in essence, are really kind of saying that we know we don't have really good originators because we really don't trust them and we don't really want them putting something out there. And certainly when you hear some of the stories of what some of them have put out there, it does circle back to if you had higher and stricter uh, hiring processes in place where you're just not taking anyone, then you are talking about, you know, getting a person that you could even provide the content to them, but to deny them the social media access. I can understand what you're saying, that they're not going to want to
Yeah.
operate in a
You,
with a
you see,
company
you
like
see,
that. So, and
yeah,
I
you
guess
see,
we have
yeah,
another
you see this in every company. Go ahead. Okay, go ahead.
um, I just had another question. What was your thoughts on, a distributed sales model versus a centralized sales model? So how do you see retail origination kind of playing out?
I think it's going to come. I don't think one size fits all. I don't think there's going to be a
Sure,
source. I mean, you see the success of Quicken.
sure,
Everybody. I mean, maybe they'll relabel them do private label work for every purchase business. I think the real estate business, the real estate part, it's still a very provincial business.
right,
All politics are local. You still have the idiosyncrasies of how properties and how things are transacted in a particular marketplace. Um, and I think that local expertise of just knowing in
right,
an advisory role what's a good, because the old mantra in real estate was location, location, location. My feeling, the new mantra should be education, 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 how to buy right. And there's a whole generation that doesn't have that trust of that the real estate transaction is a good thing to do, but they are going to, it all comes down to procreation, right? They're going to get together
right,
by, and they're at that stage now. So it's just a question of when they
right,
do it, and you want to be there in that trusted advisor role. So I think it's a combination of the two. I think the local decentralized model, as long as you have incredible investment in technology to support the workflow with imaging and things like that, I mean, you can operate anywhere. Everybody on this call is probably operating in some form of virtual adjacency every day. So I think you'll see two different models. That collaborative thing is kind of interesting because I've been toiling with a combination of kind of a hybrid model of having a call center, maybe not a call center, but a collaborative work environment, kind of an incubator, if you will, to have the newer generation of mortgage bankers kind of work together in a geography. You pick, obviously hot spots that have high propensity of mortgage business in the marketplace, so you're not fishing in a mud puddle. But and again, there's some costs related to that because it's usually higher cost real estate. But if you can put the hubs, if you will, of the newer sales force there to learn in that environment, but then they're still able to deploy in the marketplace for those face-to-face relationships. I think the combination of the kind of a hybrid call center retail space is really, and with technology really leveraged in there, is the way to go on a go-forward basis.
yeah, I guess
You're a little
my
more bulletproof to ups and downs.
yeah, I mean, I think you're right. I do what I see the separation being on, that I think the system is the mortgage banking origination system is definitely segmenting to the average and the underperformers. I think just will not be in origination. I think that's the more important point, that when you're still seeing an industry at 2 units per loan officer, you really can't support them. And regardless of whatever um, technology you have, you're having someone interface with a customer that just isn't that great and shouldn't be doing that interface. So I think it's going to segment for sure on, again, your better people, a real dividing line between the better people and the people that we've had a history of hiring that really are not good originators, is what it boils down to. Do you see that segmenting? I mean, certainly what I see from research is that 10% of the originators will do 70 to 80% of the business, and that's today. That's not old data that's now. Is that your experience?
That's the case. It's absolutely the case, and I think even the tread piece of Core August 1 is another
Yeah.
milestone in you got to perform really well. You can't tolerate someone not doing their job up front, not knowing the business. There's just too many implications and costs related to the not doing it right.
Mm-hmm.
So that's going to just, I think, hit another segment of people that aren't proactive in getting their closings done 3 days prior to closing. There's a whole bunch of people in the industry that are going to have to, loans are going to have to kind of have a wake-up call in that arena. I may be wrong on that, but and the good ones I think will benefit from it, because they're not going to change what they do. They're going to benefit from it. They're going to be rewarded for that good behavior, and the market will start to recognize that. So yeah, absolutely.
Pat, just a couple last questions because I know you have to go. One question was someone has asked, the industry really hasn't done a lot of rookie programs. There's certainly been a few on the mortgage banker side. There's really not been any on the banker side except at smaller companies. Do you see the industry, moving into this investment on new people? What's kind of your thoughts on it?
It's funny, they had a panel at the Maryland Mortgage Bankers on May 7th on that, with some people asking about that, and the thing that came up from the executive leadership, the cost and investment, trying to get your return on it. Mm-hmm. You and I've talked, Pat, over the years of
sure.
how you do structured interviews on the selection process. I think in the operations side, especially if you have learner-controlled instruction, I mean, you talked about how they wanted structured training and everything else. We have that at Guaranteed Rate. I mean, you got delivered in multiple forms, video, online chat like you're doing today. Everybody process information, some hands-on learning. But in a structured thing that's learner-controlled instruction environment, where here's the 50 modules to get the core competencies in each of these skill sets, whip through them. Some people might whip through
mm-hmm.
5 of them in 5 months. We'll whip through 50 of them in 3 months. And
mm-hmm.
those are the people that will excel and accelerate. So I think you got to have that and give them the foundational background on the transactional and product knowledge. Obviously, hopefully you have people that have the sales skill sets that you've screened for, in your interview process, and then they go the path of maybe staying on the operations side of the business, which is clearly needed to execute, or they go to the sales side, but they're not putting concrete on top of cardboard. They've got this concrete foundation of knowledge and everything else, and it's in a structured environment, again, supported by your training technology, and delivering it that way. They're used to doing that. I think we talked about the other day. They're used to getting their homework assignments off Blackboard and things like that. A lot of people have online degrees today. Nothing wrong with that. I mean, they may learn better
right.
that way. So you got to structure your company to do that. Certainly outsourcing to supplement that as a safety net with various sources and resources like yourself to help you do that, because it may be hard to build that internally at a company to make sure you got all the components in place to do it. But you definitely got to make that investment. I think you got to do it the operations side. The tough part is nobody wants to give that transaction to that rookie, right? They got to come in an operations assistant role or something like that, where they're doing set tasks and then progress up the timeline and have a blueprint for success laid out, black and white. Here it is. Here's the 6 things you're doing. We don't have that complete structure here, but we do have a structure in our pod model for them to come into an entry-level role, support somebody in a role, and then there's tons of training already built within the company to learn on every topic, from tax returns and things like that they can all take on their own. And there's required core competency on top of that. So that's there's still a little bit of the here's a desk, here's a phone, good luck, you're on your own in the industry. But if you've got the structured training within your company, you got a much better chance for success.
Right. Actually, it's interesting that you brought this up. Because certainly what I think is an opportunity out there is the companies need to make, especially when you look at the average loan officer is in their late 50s or mid 50s. I think it would become like a retirement strategy, and I'm surprised more companies haven't made an effort to really link that from a recruiting standpoint, I think it would be a powerful story to tell where you're bringing a young person, you're going to bind them with your top producer or whatever it is, and so they may not have any family members that want to go into the business. And so if you could provide a trained person that becomes, takes over their business, and then the splits end up getting changed. I think it's a great opportunity. I haven't seen very many companies do it at all, though. But it does seem to me it's an opportunity for somebody who wants to really, provide a retirement strategy for people that are.
I think it's a really good idea. We've actually seen in our company a time of need where we had somebody that got fairly ill and we have a President's Club group, put out an email, said, hey, I need some help to take care of my book, and kind of described their book.
Right.
And instantly it was great. Just shows you the kind of people we have at Guaranteed Rate. I mean, they jumped on, and guys took care of him. They're going to keep his book going and pay him an annuity stream off it. It's true for the real estate business too. You see some of them, they'll bring in their kids, sons and daughters in it, but literally their goodwill, their client base, they've got 500 past clients they've sold homes to, and literally they get out of business and those people are orphans, are gone, absolutely gone. No continuity. It's a valuable book. I'm sure there's realtors out there that end up working something on their client base, and similar. Absolutely same thing with our business, to keep that where maybe you're taking a phone call, say, Patricia, thanks for calling. Let me connect you with Joe. He's taking over my business, boom, boom, but he's still calling you, and you just do the warm handoff, and they handle it there. Absolutely a continuity stream, succession plan for companies to keep that income stream. And certainly when people leave, then you got the other companies picking off their client base left and right. It's with all the access to information there, so it's a defensive move to protect that customer stream. No question about it. I don't think there's anybody's got a real good strategy about it.
Yeah. I think it's a great opportunity, and I certainly think more companies need to pursue it. So, Pat, I want to thank you today for taking your time. I know you're catching a flight shortly. I want to give Pat, certainly would love to hear from everybody today. He's on LinkedIn. He's active. And I also want to give you Pat's cell phone number. He actually returns phone calls, and you can actually speak to him if you have any further questions. His number is 301-466-2446. And so, Pat, you've been terrific, and I appreciate you sharing your insight today. And have a safe flight.
Pat, I'm honored and humbled. I hope some value was related in our conversation to somebody, or at least stimulate a thought or conversation. And we all got it out there. So we all got to deal with it. And we got the great thing is we got an opportunity to bring on the next generation and do it right this time, which is a really fabulous opportunity. While I'm still plugging away.
Right. Well, thanks a lot, Pat.